Well, PayPal and other fintech stocks under pressure today. Mackenzie Sagalos here on set to explain why.
Hey, John. So fintech stocks sold off Friday after a Bloomberg report that JPMorgan plans to start charging for access to customer bank data, a move that could disrupt how these companies move money behind the scenes. Now, PayPal led the drop, down more than 5.5%, with Affirm, Fiserv, and Chime also sliding. Robinhood was the least affected, still holding up despite a string of negative headlines. Now, at issue here is the data that fintechs use to link customer bank accounts to apps like Venmo, Coinbase, and Robinhood. Now, that access has typically been free through aggregators like Plaid and MX, which connect banks to fintechs, but JPMorgan is reportedly introducing new fees that could be passed from aggregators to fintechs and potentially consumers. Now, in some cases, the charges may wipe out the revenue from a single transaction. JPMorgan told CNBC that it's invested significant resources creating a secure system that protects customer data and is having productive conversations across the ecosystem. Now, the fees haven't taken effect yet and could still be negotiated, but that report clearly rattling investors today.
This one's so interesting. I didn't understand the story at first. So this isn't Plaid charging. This is JPMorgan, a major bank customer, saying that it's got the heft to say, OK, now everybody, you got to pay up and figure out how the costs get passed around.
Exactly. And I have to think about other models that have done this, whether it's Uber or Netflix, where early adoption is really about making it free, fast, and easy to connect users to platforms. And once they're hooked on the convenience of that, then the pricing power shifts. So in this case, JPMorgan built the rails, and they're saying that if you want to use them, you need to pay for that service. And in the case of these fintechs, they rely on those thin margins to offer free or very low-cost services. And even the slightest disruption can have major ripple effects across their business model. It also comes at a time where JPMorgan is getting into offering more fintech-like products themselves. And one of the most effective ways to tilt the playing field is to restrict access to the very valuable data that they own.